Let's start us with that. Help us understand how to make sense of this multifamily market. Record high deliveries,
Yeah.
record low starts, record demand, record new supply, negative rent growth in some markets, slightly positive in others, population growth, but tariffs, immigration,
Yeah.
make sense of it for me.
I think that the politics, which we'll mention a little later, is that's a big uncertainty. And I think you talked about future, like people don't know what to expect. People know what the future is. Right now, it seems like it's nothing dramatic has happened or the impact hasn't yet been felt. But that's a big question mark. Other than that, though, apartments fundamentals great. They're great. There's several reports here, several data sources that are talking about whether it's household formation or apartment rent, apartment absorption, demand. That's going to be that's going to really help the multifamily market come into balance. It's not going to mean that rents grow skyrocket, but they will come into balance. And how this is way different than 2023 is, or I'm sorry, the beginning of 2024 is that the market was a lot softer, a lot more shaky. The expense growth was still like a big problem. Now expense growth is still a problem, but it's less of a problem now than it was.
The hard part is, that the psychology can drive the market sometimes more than the fundamentals.
Yeah.
At least in the short term. But so understanding the long term, let's just fast forward on the docket. Let's try to break through, where do the fundamentals come into play? Let's first focus on the fundamentals, and then let's get to all the periphery.
Yeah.
Some of it's closer than the periphery than others. But
and I think that you nailed down what I really think is the most important takeaway for this discussion. The stuff that is real is a little bit more compelling. The stuff that we know and have clarity over is more compelling, I think, and is going to be a more powerful force than the uncertainties that may be at the periphery.
So we've got a new article out from the Wall Street Journal. There's obviously more, industry niche sources that we often cover, but we always like covering these Wall Street Journal pieces because it's what more folks are reading, and it can give a little, again, getting that psychology. This might not have all the nuance, but it certainly is going to be part of the mainstream narrative. According to Wall Street Journal, we're headed toward a landlord-friendly era. Expect higher rent prices. The prospect of rising apartment rents could further stoke inflation and give the Fed another reason to pause. So let's not focus on the Fed pausing right now, because don't we still need to get into like a little bit of negative,
I know
on CPI? We're just starting to slow down. Shouldn't that take place? And I'm just talking about CPI, and I said we were going to not talk about inflation right now, but there should be a period of slow rent growth in CPI, of owner's equivalent of rent.
Yeah.
Anyway, break the Wall Street Journal article down for us, Matt. What's everyone else
and
here?
You've alluded to this too, and it's something that we've discussed ad nauseum. Not as much lately, but if this was in mid 2023, it would probably be covered in the Gray Report. The fact is, the BLS, the Consumer Price Index measured rent growth. When the Consumer Price Index measures it, that is the past. That's a lagging indicator. And right now, market rent growth for new apartments, this rent growth is like near zero, maybe a little negative.
That's what I'm saying. We haven't even gotten to national, like barely positive at zero. So and it's lagging, and the lag is longer than we thought it was. We thought it was going to be 12 to 18 months. It seems like it's more of like 18 to 24 months. And rents have been negative or have been negative to zero for almost like 18 months. So shouldn't we have more than a year-long period of suppressed shelter costs in CPI?
I think so.
Or that's just not how it works.
Well, but I think that the other thing about the BLS numbers for rent growth is they're not as spiky. So when rent spiked, the BLS numbers didn't spike as much. Rent was it's like 18%.
I know it's going to take a long time to come down, but doesn't that slope doesn't that take a while?
It hasn't.
What's being suggested is it's just going to keep going.
Yeah, no, you're right. And where it spiked and then it went under, so it was above average and then where is it going to be below average. It's still not necessarily below average at the moment.
Yeah.
So I think that there's a lot more cushion when they're talking about that. They shouldn't really bring up BLS because I'm fairly confident that that rent growth as measured by BLS will continue to go down. It's just the way it works. It's not really connected to reality. The other things that they talk about, apartment construction, this is like physical reality, is a lot more relevant to their argument. And they make another thing that we've talked about before. Builders aren't building buildings anymore, or at least as much as they wanted to or were doing, a year and a half ago.
Yeah, I don't think I saw a quote today. I think it was somewhere on LinkedIn that there hasn't been such a spread between new multifamily deliveries compared to starts since like 1975.
Wow.
It's like the starts are at a multi-decade low, and then but the new deliveries are still essentially coming off their peak.
And what's super interesting about it, because you'd think like, oh, is it returning to mean? It's all a product of interest rates. I think.
Very largely. Yeah. The other piece of information, I think it was Jay Parsons that said this, is, and this has not been covered as much. RealPage, I guess, has made a couple notes on it. Is that a lot of the new supply that's been started over the last couple of years there's a lot of affordable housing in that mix, in subsidized housing, because how have any development deals, ground up deals, been done? How can you make a pencil in the last 2 years? It's incentives from local municipalities and local governments, and typically for those subsidies and incentives, you're having to do some set asides. So it's not like, so I think there's like for 2025, like the rolling like the T12. Or like the T12 of like under construction is like around 330,000 right now. There's a big chunk of that is either set aside. That's not all market rate. A lot of that is subsidized, set aside, and there hasn't really been a study. I need to look up this RealPage piece. But so like we're looking at maybe 330,000. But again, the market rate could be well under 300,000.
Yeah,
and that number, that's what's like currently under construction right now. After we delivered, more than 500,000 in 2024, starts are still falling off. And if there's still any new development right now, again, there's still incentives. There's affordable set asides, and so like how much actual market, which all that is good.
Yeah.
All, that's all really good stuff. But we're typically used to looking at that number and assuming it's almost all market rate.
Yeah.
And that may not be the case, which affects those numbers also.
Wow. So, and that's something that I've seen in the new market report too, is they put a chart down and the fall off in apartment construction is almost maybe even steeper than the jump and spike in apartment construction, which was, the most we've ever built in like 75 years or something like that.
So the supply of the new deals are coming down. Another piece that, again, with this tariff talk, again, we don't know how many tariffs will be real, how many will be just negotiating tactics, how many will stick around, how many will be here forever. Yeah. We don't know the answer to those questions. None of it makes it cheaper to build apartments. That's where I just keep coming back to is the price. Is that going to make things more expensive or cheaper?
Yeah,
and cheaper is just not in the cards. I was having a tour with driving around town with a developer yesterday, looking at some of their deals, and he mentioned that there's only been 1 year, I guess, since they've been recording construction cost for multifamily, but I think larger construction industry, but specifically multifamily. 1 year where costs came down. That was 2010, kind of post GFC. The prices aren't going down.
Yeah,
it's not getting cheaper to build this stuff.
Yeah,
and here's back to the psychology. He's already getting calls from his suppliers saying like, "We're anticipating the tariffs. Get your orders in now."
What do you think they're going to do?
They're not lowering their prices.
Yeah,
I'll tell you that much.
Well, and
they're like, we got to get in front of it. We got to get the prices up now. You got to order now. The switches, the electrical switches. There was in COVID. There was a 24-month backlog. You can't turn your building on until you get the switch.
Yeah.
I'm talking a big switch. I'm not talking a light switch.
Yeah.
Now, we're not expecting those types of COVID-related manufacturing delays and things like that, but
that's the price of uncertainty, more or less.
The price of uncertainty.
And he wants that certainty of getting it, so you pay more, so that you have that on hand. And that's kind of what I'm getting at a little bit is like, wow, there is a cost for making these dramatic moves and stuff, and well, we'll see how that shakes out. But again, like to return to the fundamentals, we do know for sure that they're not building as much as they were before, and I think that's probably the biggest driver of rent growth, or will be, moving into 2025, 2026. They make a show of talking about how high home prices have also driven up the rent, and so does Newmark in their report too. I just think that it's easier to look at housing demand as a whole, and rather than trying to parse out which of the housing demand softness means, housing prices go down. Does that mean that they're pouring into rents? I just don't. Yeah, I'd like to think of how, household formation maybe, but not those kind of things. But in the end, like their focus on rent increases and the burden that they represent, I think is important perspective to acknowledge, and really like this is what articles like we talked about all these issues, right? And yes, it's a nice excuse to talk about stuff we've covered over and over again, and talk about how we knew this before, Wall Street Journal, which is fine. I think most industry people.
Well, I think we're supposed to.
yeah, exactly. But also, this is a good reminder that the audience that they're aiming for, they're spending a little bit of ink or digital ink or whatever. They're talking about renters' perspectives. High rents are going to get pushback. High rents, the rent rises that happened 2 to 3 years ago. People haven't forgotten about that, and so I think that that it's not necessarily like a counter.
Some markets people are getting some good deals though. Some people are also remembering. They're like, I've heard just some stories in Austin where some people are like, I just got a deal.
Yeah, and that's another thing too is positive rent growth. They talk about, oh man, there could be positive rent growth this year in Wall Street Journal, as though like rent growth really it usually grows every year. That's if it's 0.5% or 3%, then that's what that's really worth mentioning. But I still think that the whole upshot of this is that we're going to see more demand, and I don't think that it's going to be dramatic. I think it's going to be regional, though. And it's going to matter whether you're in Austin or whether you're in the Midwest or whether you're in some of these coastal markets that they've brought up. And we'll see a lot of divergence because the market is moving in different directions due to construction patterns. Construction patterns are different in every different city, so we'll see some different. I'm kind of excited to see what happens with the market now, if the Sun Belt continues or kind of breaks through again, or
it sounds like again the calls are by the end of 2025, maybe not strong growth, but at least positive in a lot of the Sun Belt markets. Maybe not full recovery across the board. Now again. 0%, flat rent growth this year, is after, negative, 8% rent growth last year, and, a little bit negative the year before. So still significantly off the peak. It was just like when they said, San Francisco is crushing it in rents. It's like they have been lowering their rents for the last 3 years, and it's been a dumpster fire just because they had one positive month. Yeah. It's like, they were brought down to 0, and now they're getting back up. It is
crazy.
Good. I'm glad that they're not slipping, but it's because they're at the bottom. But that the reasons they're not looking at the full graph.
Yeah, I remember when we started tracking that, it was like, man, Seattle and San Francisco. It was
in Minneapolis.
Yeah, their rent growth was always
catch
very
a
low.
break.
But
it was for a variety of reasons.
Yeah, if you